Hello, you're welcome. Today, I would like to talk to us on the new Nigeria tax law. This tax law was signed into law by President Ahmed Tinubu in 2025 and is going to become effective from next year. And so it's very important that everyone understands the basic provisions in this law that directly affect you as a person and me, and also as companies. What are the various provisions in this law that directly affect you? That is the essence of this video. I have done my best to simplify it and also summarize it so that everyone will be able to relate. And so I will get into it very quickly. The first thing that I want to draw your attention to is the effective date. That is the date that this law will become operational, the commencement date, and that is January 1st, 2026. That is about 2 months from now. This law becomes effective and it affects virtually every Nigerian, and we will see that very shortly. The second thing I want to draw your attention to is the scope of application. Before now, there are some certain individuals who earn money and their money was not subject to any tax. They were able to take 100% of what they earned. Going forward, that is no longer going to be possible. This law applies to everyone who earns income in Nigeria, and this includes employees, freelancers, online creators, traders, and Nigerians abroad who are considered tax resident in Nigeria. Now, let me explain what this means. If you are a YouTube creator, for example, that your income that you earned is going to be subject to tax. If you earn income from crypto, going forward is going to be subject to tax. If you earn income from trading online, it's going to be subject to tax. There is no room anymore for anyone to be able to evade tax in Nigeria because it's going to be very difficult. Perhaps in your mind, you are thinking, how is this possible? How will it be possible for government to know what I earn from YouTube, from online, from Upwork, from Fiverr.com, and what have you? Now, you notice for some time now, banks in particular have been making effort to make sure that every account is linked to NIN. Even if you have supplied your driver's license, you have supplied your international passport or any other valid means of identification, your bank will insist that you must link your account to NIN. That is part of the ground plan towards implementation of this new tax law. Let me explain what this means. From 2026 January, nobody will be able to operate any bank account in Nigeria without a tax ID. And what government has done to make this simple for everyone is that for those who already have tax ID, it's okay. Your tax ID and your NIN will be synchronized together. For those who do not have tax ID yet, effective January next year, your national ID, your NIN, automatically will become your tax ID. Those systems are already programmed to run. And so everyone needs to be conscious of this, knowing that every money that flows in and out of your account now is going to be monitored by the tax authority. You should now be careful with how you categorize what comes into your account. Maybe your transaction narration. If somebody sends you money and there's no narration, it might be taken to be an income. So narration on how you send money out of your account, and even if people are sending money to you, it should be very clear as to what that particular money is meant for. Very important. Otherwise, people might be subject to pay tax for money that is not earned as income. But what is most important from here is that it's going to be almost impossible for anyone in Nigeria to evade tax going forward from 2026 because of the system put in place and because of this enforcement that you cannot operate a bank account without a tax ID. Guys, let's watch out for this one. And number four. So this number four is a good one. This number four is talking about people that are exempted from tax. So any individual that earns 800,000 and below is not subject to tax. So if you earn 800,000 naira and below annually, your income is not subject to tax. Those who are going to be paying taxes are people whose income are 800,000 naira and above annually. And I think this is a good one. And this has been increased from what it used to be. I think it's a good one. Thumbs up for that one. The next is interest on mortgage. If, for example, you are taking mortgage from a bank or from a financial institution, and then it's your own house that you live in, the interest you pay on that mortgage is tax deductible. But this house has to be owner occupied. What it means is that the interest element of your mortgage repayment can be deducted from your income to arrive at your taxable income. And by this will lower your income liability. And I think this one too is a good one. Number six, there are people who take life insurance or what we call deferred annuity. So if you take a life insurance for yourself, for your spouse, or any of your dependents, so the premium you pay for that life insurance is tax deductible. It can be deducted from your income before arriving at your taxable income, and this will also reduce your tax a bit. And if you have a policy that is called deferred annuity, now deferred annuity is a policy usually taken with insurance company that have maturity date for a medium to long time period. Most of the time is taken with a focus on retirement. But in some instances, the insurance company will allow you to be able to access certain percentage of the annuity value after 5 years. So if you take a policy on this deferred annuity and you are paying a premium on it either monthly, quarterly, or as the case may be, so the premium element you pay is also allowed as a tax deductible. So this can also reduce your tax liability a bit. While these are not new, it's just that they are becoming clearer by the day as we go into this new tax law. Number seven, terminal benefit. Terminal benefits are money paid to you if you are disengaged from your place of work or you decide to maybe retire voluntarily. Now, if the money that is paid to you as terminal benefit is 50 million naira and below, it's not taxable. But any amount in excess of 50 million naira is taxable. Let me explain what this means. This means, say for example, you retire from your place of work and then your employer said, we want to compensate you, and then they paid you 50 million naira. That your 50 million naira is not subject to any tax. But if they decide to pay you 70 million naira, 50 million out of that 70 is not taxed, but the remaining 20 million, which is above 50 million, will be subject to tax. Number eight, for those who live overseas or those who have investment overseas, either investment in stock, shares, investment in property, and you are collecting either rent or dividends from those investments. Now, if you bring your dividends and your rent earned into Nigeria through government approved channels, that your dividends and your rent will not be subject to tax. But if you want to bypass corner and go and bring in through other means, government will track it and it will be subject to tax. Now, if you are wondering what the approved channels are, the one that we know and can easily relate with are the commercial banks, the banks. So if you bring in your proceeds through the bank, it will not be taxable. Please take note of this, very, very important. And this is regardless of whether you live in overseas and you earn this income there or you live in Nigeria and you earn this income here, to the extent that the tax defined you and find you to be a resident in Nigeria for the purpose of tax, this is applicable to you. And number 9, for those who are interested in agriculture, this one may interest you. So if you start an agricultural company today, from the date you start operation, if you are into crop production, livestock, forestry, or cocoa processing, this law gives you 5 years tax holiday, meaning for the first 5 years of your operations, you are not going to pay any tax. And this is a good one. Also, thumbs up for this one as well. And number 10, the category of companies or businesses classified as small businesses are companies whose annual turnover or annual income is 50 million naira or less, and the total fixed assets are 250 million naira or less. This company in this category are exempted from company income tax, capital gain tax, and 4% development levy. This 4% was just introduced in this new tax law just to harmonize and bring together all the pieces of taxes in the previous law. But if you have a small company that operates within this threshold, your company will not be subject to tax. And I think this is also another good one. And you can decide to take advantage of this so that you can run your company. But company, as mentioned here, is limited liability companies, not a business name. If you operate and run a business name, the income of that your business name, that your business, will be subject to tax under personal income tax. This is not applicable to you. More of this subsequently. If you enjoyed this video, please give it a thumbs up and do well to subscribe to my channel so that you can get more video like this in the future. Thank you. God bless you.